Hey guys, it's George David. In this video, we're going to be talking about Coca-Cola stock and also how Coca-Cola might have a quarter 1 earnings surprise tomorrow, April 19th, 2021, that might translate over to a nice 10-15% increase in the stock price over the next couple of days and weeks. So as always, let's dive right in and also touch upon today's economic news on the stock market front to understand how Coca-Cola as a short-term investment translates with the economic news that's happening right now. All right, so in this video, we're going to be talking about number 1, Coca-Cola stock analysis and the earnings surprise that's going to be happening with Q1. We're also going to be talking about number 2, today's stock market news. Number 3, is it time to buy, sell, or wait? And number 4, triggers for a stock market crash. So let's dive right into that. So currently, Coca-Cola, the entire corporate entity, is taking in approximately $33 billion a year in revenue. Now, when you take a look into the future, the maximum revenue potential of the company is approximately $50 billion a year. This equates out to a growth multiplier of approximately 52%. Now, with that all into account, we do believe, and we're going to be touching upon this a little bit later in this section, but number 1, Coca-Cola is trading at value. So it hasn't caught up to the market quite like how some big tech entities have done it. So although 52%, when you take a look at other corporations out there like a Tesla, a Zillow, even just companies that we reviewed previously like Expedia, 52% is not a lot of corporate growth upside. However, Coca-Cola has a strong balance sheet. It's also trading undervalued. What we're going to see is a Q1 earnings surprise that's going to give Coca-Cola a nice lift. Don't forget, Coca-Cola also offers a nice dividend as well in excess of 3%, and that might continue to increase over time. So these are all factors why Coca-Cola, before we break down some other reasons, is an attractive play at the moment before tomorrow's April 19, 2021 earnings surprise. Now, when you take a look at Coca-Cola in a microcosm, Coca-Cola isn't necessarily the greatest investment out there. There's stocks, if your window of opportunity, which I highly recommend, is a 10-year opportunity. You're trying to find the most bang for your buck, then Coca-Cola is definitely not that company for you. The upside is limited, but if you're looking for something that could replace bonds in a portfolio, then Coca-Cola is definitely a good option with very solid dividends and stock growth potential there. Now, is Coca-Cola a mass use stock? Well, Coca-Cola isn't just limited to just the drink. There's lots of other derivatives and products that are out there in the corporate sphere. So yes, is it a mass use stock? The company has goods and services that not only a lot of people use, but you would use and interact with as well. Now, let's dive into today's stock market news to start to discern whether this Q1 earnings surprise for Coca-Cola is a good time to buy. Now, again, as we've been touching upon over the last couple of days, the big 2 news in the market that are going on is number 1, corporate tax rate increases. The Democratic agenda is looking for about a 28% corporate tax rate. Right now we're at 21, but the consensus is that number is going to shake out around 25%. So that definitely will tangibly impact earnings. We're going to touch upon that and how that relates to Coca-Cola in just a moment. But the other bigger one that I think a lot of people are surprised with is although Russia and the sanctions that are happening with Russia and Russia's commitment to retaliation to those sanctions are playing out, and on the surface, the United States doesn't do a lot of business with Russia, unlike China. There are some very critical implications out of this that need to be taken seriously and are more of those second and third order consequences. This is something that Ray Dalio talks about. So let's dive in to this. Is it time to buy, sell, or wait? Well, right now we're in a part of the market where we're in a waiting pattern. Right now, the best opportunity to buy into the market or a specific stock was back just before the economic recovery started happening in June 2020, so it was around late May. A little bit different with Coca-Cola. Now, Coca-Cola is trading at a little bit of a discount. It hasn't caught up just like this graphic showed. So with a good earnings surprise, it is a good time if you're someone that is just basically just looking for something to replace bonds. Then you do have the green light. But if you're looking for long-term investment, I actually don't recommend Coca-Cola for that, because there are some better opportunities with your money, more upside with less downside if your window of opportunity to invest is over a 5 to 10 year span. So in the market as a whole, we are currently at a waiting pattern. If you're looking specifically for Coca-Cola, there is some upside. There will be some Q1 surprises. That upside won't be huge. There might be about a 10 to 15% lift over the next couple months, but you're pretty much limited with upside after that. So again, the reason why we want to wait, as I always emphasize in the other videos, if you're looking for one of those really good investment choices, well, going back to the tech bubble in '99 and something that we're experiencing here, you don't want to buy an artificial dip that's not a real dip, because as you know, and as I've talked about many times, if you buy at the right time and you sell, if you did that there, you would have lost a good 20% of your money. But if you bought at the golden cross point in earlier in '99 and sold in September of 2000 when the death cross happened, then you would have made a nice 30–40% return on your money. You got that upside. That's all in about a year and a half without subjecting yourself to excess risk there. So that's always what I like to drill in here. Now, why is it really important to understand the triggers of a stock market crash, especially in relation to Coca-Cola? Now, Coca-Cola is a company that is a little bit weakened. You know, it's a value play. There's a lot of good things about Coca-Cola, but there's also a limit of upside. Now, it's very important to understand different triggers of a stock market crash and also a correction, because once those things happen, it will impact Coca-Cola's stock price. Now, what's going to trigger the next stock market crash? It's pretty predictable. Number one, when interest rates start getting higher, the Fed goes into the market, starts intervening. That tangibly impacts spending, both that businesses do because it costs more on interest and loans, but also consumers as well. This is percolating into different aspects of the economy. People are taking out loans at higher interest rates. That means there are bigger mortgage payments, bigger automotive payments. The second catalyst there always is spiking oil prices as well. What happens, that permeates to all aspects of the economy, that impacts transportation costs, that impacts the manufacturing of goods, because a lot of goods, the inputs of those require oil in one way or another. And that also comprises and shocks, different aspects of the industry. Number one, spiking oil prices can cause businesses not to as effectively pass that on, cost push inflation to other, goods and service prices. So when you can't do that, then that slows down the amount of revenue that comes in, that starts impacting earnings. And obviously, just coming back to a consumer level, that increased transportation costs and inputs to lumber and things like that start impacting spending as a whole. So let's remember that really carefully, so we could tie into Coca-Cola and also understanding where we are at the stock market cycle as well. Finally, as always, a third wild card situation would be another pandemic lockdown, whether a hybrid variant of COVID comes out and starts shutting down businesses, which impacts spending, or another pandemic comes out and starts locking down businesses and we don't have a treatment for that. That's always the wild card there. Less likely than the other two, and those other two things are starting to build up. Now let's tie in Russia, let's tie in Coca-Cola to all this to understand just where we are in the economic cycle. So Russia's sanctions, again, as I mentioned earlier, we don't do that much business in the United States with Russia, so a trade war with Russia is not that consequential at the surface level. This only becomes a problem if Russia retaliates and starts cutting oil supply to the Western Hemisphere. Once that happens, that starts raising oil prices, and that starts economically impacting the amount of spending people in Europe can do, people in China can do, people in the United States can do. When that happens, once there's an impact to spending, that causes revenues to start being impacted. And when revenues start being impacted, because less people have more money to give out to things, because businesses are spending more because of higher oil prices in the inputs of their goods, and also consumers are spending more for those goods, and also in terms of transportation costs, then that's when companies start missing on earnings, or earnings start weakening. And that's the building blocks and triggers to a stock market crash once consistently big entities start missing on earnings, or earning weaknesses start to come in. As well, we talked about corporate tax rate increases. This definitely will cause a stock market correction. This will most likely come before an economic crash, or there will be a correction with that, as businesses will have lower earnings. But ultimately, this doesn't impact spending, because earnings are a tax line item. It doesn't necessarily mean that businesses can't spend as much money on the manufacturing of goods and services, and also other factors there in terms of hiring people. So the economy won't slow down with corporate tax rate increases too much. If they went up to 35%, that's a different story. That would be a shock. But a 21 to a 25% jump is just merely a correction in the market. Now, when we tie in all of this with Coca-Cola, as I mentioned, it's a good time now if you want to squeak out a little bit of profit, but it is not the best move, because number one, you only have a little bit of upside before these other factors start coming in. Corporate tax rate increases, Russia sanctions, and a lot of that money is flowing into big tech. So those are just a couple things that need to be taken into account. We most likely, with Coca-Cola tomorrow, April 19, 2021, are going to have an earnings surprise, and that's going to give a nice positive momentum in the short term to the company before these other factors start coming in and might precede an economic correction, and especially in terms of the stock market. As always, go ahead and smash that like button if you want to smash it just as hard as you want to avoid paying higher corporate income taxes, especially if you're a small business owner. And make sure to subscribe to the channel. We'll be posting investing, relationship, and mindset advice almost as much as possible. I try to do it every day. And of course, if you find this information of value, it will help the channel grow and bring this free advice to as many people as possible. Once again, thanks again, and I'll see you guys in the next video.